I do continue to think that Trump is a trading man. You gotta trade Trump. You gotta be nimble with a little bit of your portfolio to get in and get out. Those SMCI trades, where all of a sudden the micro becomes more important than the macro for a couple of seconds.
In my opinion, Trump will use the stock market as his benchmark. So he wants the stock market to do well, like you said. Maybe in the last year he wants it really to go boom, and right now he's the savior of the country, so he will do anything to put America first. So who is gonna pay for those higher prices?
Well, the best investor in the world said it, Warren Buffett. He was like, the tooth fairy does not pay the tariffs, right? Somebody has to. And obviously it depends on the elasticity of demand of the products, who's going to be the one paying the cost of the tariffs. Hello and welcome back to another episode of Market Buzz. Today we're going to be talking about the recent correction, what is driving markets, what's the Trump trade, and is the world about to end or not? In this episode, we're going to touch on the correction. We're going to touch on Trump tariffs and what we think is going to happen next and how we're positioning our portfolios to take the most advantage possible. First things first, Timothy, what is going on? Why is everybody freaking out in the stock market? Is it over? Is the bull rally over?
Yeah, so I think market is spooked mainly because of the uncertainty. So what we're seeing is investors not really being confident in the US market. While the European stocks have been rallying, the stocks of US companies have been going down. And right now it's at 5 to 6% crash. No, I wouldn't say crash, but a correction. But that's typically once, twice a year we can have a correction of 5 to 6%. So it's not up normal. But yeah, yesterday I even sent a mail to my followers that we have a change in trend. So yesterday was the first lower low after a while, after breaking the uptrend. So it's definitely a first sign something is changing here, because markets don't like uncertainty. They like to have the markets predictable. Biden was predictable. He was old, he was slow, but people knew what he was up to, and that's what investors would like to see. And right now with Trump, it's like too many.
Yeah.
What do you think?
It seems he has brought every single American issue center stage, making the fear, uncertainty, and doubt the highest it has been in such a long time. I do believe the fear index for both cryptocurrencies and the stock market is at all-time lows. Maximum fear at the moment, just because everybody doesn't know what to expect, right? We saw this during the COVID pandemic. Nobody knew what was going to be the future. How would this impact? Now, this is not the same scale because we're not stopping the economy dead on its tracks, but we're definitely making cost more expensive, right? So some of the reasons that we're seeing this sort of decline has to be because of the Trump tariffs, right? And the Trump trade. So this is something we're going to touch on a little bit later in the episode, but I just wanted to make sure it's center stage, because it is, right? But he has brought everything center stage. So he has brought the Ukraine war, the Israeli war. Those two major wars are coming in. The trade war with China, Mexico, and Canada are center stage, which is just, it's like, you want to take it step by step, but he seems to be wanting a resolution for everything extremely quickly. And we don't know where to look, right? Like, you're creating fears. The people that are fearing the wars are now coming back in, selling their positions. The people that are fearing the trade wars are also center stage. And then inflation is also becoming a big part of it too, right? So what we're seeing here is nothing more than a FUD trade, right? Fear, uncertainty, and doubt. There is implications that will come out of every single thing that is happening, but we still don't know crystal clear what those effects will be, right? So it's very difficult to make predictions and make decisions when the landscape is always changing in such a drastic way, which is what investors don't like. I'd rather keep my money in cash, wait for that clear signal in order to take advantage. That's also why the TLT seems to be going up as well, right? Which is like, a lot of people are going into bonds saying, hey, I'm happy with a 5%. I don't need to deal with this volatility. Because we've seen at the start of the year in January, after Trump took office, we saw the S&P 500 going up 6%, down 6%. 6%, down 6%. We did the latest decline from all-time highs. The Nasdaq is down almost 10%. The S&P almost 7%. So we're seeing that volatility increase just because of those fears starting to come in, right? Do we see this going forward? I do, right? But I hope at least that Trump has a plan with this, at least with the tariffs with Mexico and Canada, to maybe meet somewhere in the middle, roll back, and start making deals. I think he just wants to bring everybody to the table, and Trump tends to do this, right? We've seen it, what he has done with Ukraine, which is what he's done with Canada and Mexico, which is usually, Trump has to come in with a position of power, He's marking territory, as some people will call, right? But he's doing that by damaging his own house in this case, right? So something to pay attention to, but he's coming in with a position of power because he says, look, I'm going to do a lot more damage than what you can do to me. So let's get a deal done quickly. And I want to make you feel like you have won later, but in reality, I'm going to be the winner. Right. And the question is what is that? Right. Something else that we're definitely going to be talking about during the second segment. Where another thing is the GDP expectations. The Atlanta Fed came in with a chart that says the Q1 2025 is going to be a negative growth in GDP. So we could potentially see a recession. And he already seems to be throwing that towards Biden's plate. So, yeah, I mean, inflation is also center stage. Tariffs are going to be inflationary. What he's doing is creating uncertainty.
One question, Nestor, like GDP is negative, but the reason why I believe it's negative is because with the tariffs, everyone that's importing, they want to do it quick before the tariffs come.
Correct. The front running.
Once they're there, they're gonna really buy or pay way more than when there's not tariffs. So right now, yeah, they're front running, and I'm not sure if it's gonna be negative in Q2, for example.
Well, interestingly enough, so there's three major factors that are affecting the GDP read, right? So we have the imports. Imports have been drastically increased because people are front running, like you say. The second one is consumer spending. So the consumer is starting to actually see a little bit of decline in their spending and their well-being as well, just because we're seeing inflation starting to, maybe started slowly creeping back up. It's affecting the way that the consumers' habits are going. And, some people are expecting the economy to get better. Some people are expecting the economy to get worse. So that's definitely something that's impacting the whole formula. And the last but not least is government spending, right? We are entering austerity measures by the Trump administration, right? Doge is, you can put it, they are cutting. They want to cut. They want to reduce government spending. They want to reduce taxes as well, which is counterintuitive because if you want the government to run properly, you have to spend money. You're cutting taxes, you're going to get less money, right? So you're creating this austerity measures with a little bit of increase in personal income for the Americans, but I do believe that that's going to get shady and dark, right? So it's very muddled right now to see who will be the clear winner. So far, Doge has cut in 55 billion, but in the grand scheme of things, it's nothing. Right? Like the government is spending $7 trillion every year, right? What are we doing here, right? It's like, okay, let's figure out how to increase either productivity or all of the other factors, but we're focusing on the ones that could create a lot of issues for the Fed and for all that. So this is definitely some of the things that are, so as you can see, it's just so much uncertainty, so much doubt within the market that is just, I'd rather just get a 5% yield. That's how it feels at least. But yeah, cool. Okay. So anything else you would like to add?
Yeah. Just going to the second point, we're about to discuss what's the evil plan of Trump. So what is he thinking? Why is he doing? What's his main goal? So what do you think his plan is?
So the Trumponomics, you want to understand what the deal of Trumponomics is, right? So I think, and this is going to be a little bit controversial, a lot of people are not going to like this, but I don't think Trump has lied at all. I think he came in and he said he was going to do this, right? We just didn't think it was going to be to the extent that we are getting it because we're getting slapped with it extremely quickly. But he hasn't lied. He said, look, I like tariffs. I'm going to impose them because I think other people can pay for Americans. He doesn't care what Canada, his approval rating Canada is. He doesn't care what his approval rating in Mexico is, right? So we have to take into consideration that. And he also doesn't have to get reelected, right? An important point that I heard was that he only needs his last year in office to be a great one. That's it. He doesn't care. right? Like he doesn't care right now because politics forgets really quickly. So as long as we get that last year to be the best year there ever was in politics, that's what he would be remembered as. So in this case, right, what are we seeing? We're seeing Trump come in, and a way that we call it is like he's like pissing to claim territory. Right. But one of the problems of him doing that is that he has to piss in his own house. So he's pissing in his own house, but he doesn't care. Right? He doesn't care because he's not running for re-election. He's willing to take the damages. He's willing to take the risk. And that is what he promised the American people. And that's what people want. If you go into True Social right now, people are loving this, right? Because people don't care, right? Like the majority of Americans, are sitting on the sidelines waiting for the economy to just get better for them. This is the reality. Us, like investors, it's like, yeah, the stock market might punish him, but at the end of the day, he doesn't really care, because as long as the stock market comes at the end, he will be the best president. And even if he's not, he will claim he was, right? Because he likes that story. He's that advertising man, right?
I also
But what about
think,
you?
yeah, I think like he also wants the rates to go down. So that's my opinion. He's succeeding right now because the TLT is going up, long-term rates are going down. So that means the Fed is more likely to cut rates sooner, as people are expecting now. The problem is it means the stock market can have some pain in the short term. So he doesn't care what the stock market does in the short term. He's just doing what he wants to do. And to get there, it means trade war against Mexico, against China, against, everyone who stands in his way. But do you think these tariffs, it will eventually put higher, let's say, prices for the consumers? Because the importers, they will have to pay a higher price. So who is going to pay for those higher prices? It's going to be the US citizens.
Correct. Well, the best investor in the world said it, Warren Buffett. He was like, the tooth fairy does not pay the tariffs, right? Somebody has to, right? And obviously, depending on it depends on the elasticity of demand of the products. Who's going to be the one paying the cost of the tariffs, right? You have Chipotle, for example, they're saying, okay, we're going to take the brunt of the cost of the tariffs, right? But then you have on other sectors, like if my product is really inelastic and people are willing to pay whatever, it doesn't take away from the fact that you're going to need it. So you're going to have to pay for it, right? So then that's where the consumer gets a little bit muddled. So yeah, I do think inflation is going to shoot up a little bit, and we have to see what the impact is, because again, America imports more than they export. So this affects them. This affects them strongly. Right? This has a deep rooted effect in the economy. And to take into consideration the consumer in this case, I mean, like, he doesn't seem to be wanting to do that, but he has to. But at some point, that's the reason I think he's going to probably dial back a little bit when he starts to really feel the damages. But again, when America sneezes, the rest of the world catches a cold. So it's going to be a lot more damage for the outside economies, right? China can handle it better, but Mexico and Canada are really tied in with America, right? What does this create? This creates long-term uncertainty. Like, the Americans could potentially increase production in-house. Do I see that happening very fast? No, right? How long does it take to build a factory? Years, right? How long does it take for the investment to come in, for you to all of a sudden create the jobs, create the infrastructure in order to supply those things? And then are you going to be competitive long term? Because if the next administration comes in, all your efforts are kind of done, right? He wants people to build in America, and it makes sense to kind of like try to build, but you take away that benefit of importing, which is like, if somebody else can make it cheaper, I'll buy it and I'll focus on the next step, the next production of the next phase of productions. Yeah, like, inflation is going to come up. It's going to come up for sure, right? And the question is how much is it going to come up? Because if we destroy the economy, right, one of the things that you're saying, he was interest rates down, but if inflation comes up, the Fed can't, and then we run into stagflation. So that creates a massive problem. That creates an issue. The other thing that he can do in order to get maybe not interest rates down, but potentially stimulate the economy a little bit is one of the things that he's already talking about, which is like easing regulation on banks, just to allow them to lend money more. And that's one thing that he did in his first term, and I think he could be doing again, and that could potentially ease some of that burden.
Bullish on banks? JP Morgan, Bank of America.
Potentially, yeah. I mean, JP Morgan is one of my top positions.
We're seeing the financial sector going up. The financial sector has been soaring in the last weeks. It's actually one of the only sectors, and healthcare sector is also going up. That's been performing well. Tech sector has had a massive hit. So
Actually, I have a take on that, right? I think it's profit taking, right? We are entering a profit taking phase where the majority of investors were trying to hold on the massive profits that they make in the last 2 years, and now they're selling, right? Like now there's so much uncertainty in the horizon. It's like, why hold? Just sell, potentially pay taxes at the end of the year, but you still have what? You still have 9 months of potential trading and investing that you can do before you actually have to pay taxes on that capital. And hopefully he cuts, hopefully he cuts the capital gains taxes and all that stuff that he seems to be promising, but we'll have to see and wait and see what he actually gets through Congress.
yeah.
You know? But yeah, definitely see that. And I think like the profit taking. And another thing that I wanted to mention too is the UK. The UK is increasing capital gains taxes from 10% to 18% next year for the lower tax rate. So that's a massive jump, So a lot of people, there's like, it's like if you didn't sell in January, if you didn't sell in February, you're selling now. You sold in the last couple of days just because I'll capitalize this. I'll figure out where to put my money later when there's a little bit more clarity in what Trump wants to do. And the UK is still a massive financial market as well. So something to keep an eye out for. But yeah, what do you think his goal is?
His goal, yeah. My assumption is, yeah, the lowering of the rates. Already said that. But in the long term, in my opinion, Trump will use the stock market as his benchmark. So he wants the stock market to do well, like you said. Maybe in the last year he wants it really to go boom. And right now he's the savior of the country. So he will do anything to put America first. That's what he's doing.
Yeah, that's the problem. The thing is just like with his the way that he's been acting in a couple of issues tells me that it's like if I had to like rank his priorities is Trump first, America second, right? So for example, like the Trump coin fiasco tells me that he doesn't really care. He's like, if I can take advantage of people, I'm gonna, right? That's the thing that gives me hope with the strategic reserve. I think he's buying Bitcoin, all of the major cryptocurrencies to just sell it to the US government, take all the money out, and then just like get out of the asset class later on, So there's the volatility that he's creating, it's crazy. Even in crypto markets as well. So I wouldn't put it past him. You know what I mean? I wouldn't put it past him to be able to trade markets on the side with who knows where, right? But anything else you want to add for this?
Yeah, this week was incredible volatile for the crypto market. So you had Bitcoin going from below 80K to over 90K like in one day after you had this tweet about where Trump said he's supporting Bitcoin, Ethereum, XRP, ADA, Solana. And you saw this massive take profit again. Like probably his son knew or told Trump to put out this tweet so he could take these massive profits. We had like a 50 million trade with a very tight stop loss on chain. And it was clear that was like some insider info because Bitcoin had to move 1% on a Sunday and it was massively liquidated and somebody knew what was going on. So I don't like to use the word manipulation, but I mean,
it's textbook. This is textbook manipulation.
Yeah,
it is. I mean, he doesn't care. I mean, he's sitting in the highest office. Who's gonna come for him? Right? Chavez said this, and I don't condone Chavez behavior, like the ex-president of my country, but he was like, "Águila no caza mosca." You know what I mean? It means like it means the eagle does not hunt the fly. So it's like at this point he's just the eagle flooring high. He doesn't care. He's definitely doing it. In 100%. Trump comes out of this way richer, way more powerful. For sure. All right. So for the people that have stayed, what's next? What's next, Timothy? What's on your desk right now? What are you looking at? What is the things that you're waiting for in order to either commit more capital? How to move your portfolio? What is the things that you're paying attention to right now? And what should everybody else be? Maybe get in the comments below people telling us what they think as well.
Yeah. So personally, I'm not a fan of selling stocks based on the macro news. I mostly like to focus on how is the business doing. Like, for example, are people still gonna search on Google after these trade wars? Yes. Are people still using Microsoft? Yes. Are people still gonna consume online, spend on Amazon Prime? I believe so. Yes. So for me, there are certain companies that are proof against these tariffs, but also recession proof. So you have to hold those that can endure these economic swings. You don't want to be like in airplane sectors or, I don't know, sectors with high cyclicality, because you can get burned really quickly. In terms of my portfolio myself, I do have a few assets that are overvalued. Like I said before, the financial sector has been soaring. Let's take Mastercard, for example. It's a good company, but it's getting a bit overvalued. So I might take some profits there as well, just to have some cash in case the market continues dropping, which is always possible. So you always want to have some cash on the side. But I'm not going to sell my Nvidia. I'm not going to sell my Amazon or Meta, because one, they already have dropped double digits. I don't know Nvidia, but it's over 20% in the last few weeks. And secondly, these are the companies you should be buying, because these are the companies that are making more money. Their value is increasing. If you're thinking long term, that's the wave you want to ride. So that's the company you want to buy instead of be a seller. What you think?
Yeah. I agree. The thing is like there's so much value in these companies, right? And a little bit of volatility and a little bit of uncertainty does not change my thesis on them. I'm definitely reassessing just to make sure that how the tariffs could impact companies like this. So for example, Nvidia is one of the ones that is on my desk right now because it's one of my biggest positions, and also because the impacts that it has, on the current environment has created a lot of uncertainty in two major factors, right? So we have the tariffs on one side, and the tariffs are interesting because it's like, okay, now everything is more expensive. That's probably gonna potentially could affect the margins that Nvidia has. Could this continue to get worse, right? We went from 76% gross margins all the way to 70. Could we go from potentially high 80s to 70? And now could that continue to be lower as the market volatility and uncertainty starts playing in? And now that we have the tariffs and the input costs might start to rise, could that get affected? So that's one part. The other part is the geopolitics, right? And who are the winners of what's happening with the Ukraine and Russia? I think it's China. You know what I mean? China. Like the interesting thing is that right now you are seeing America retreat from the leaders' seats. And completely understandable. I mean, Trump has to represent Americans. He does not represent the world. And he's not my president. You know what I mean? Okay. So what happens? Europe has been left naked. Right? Europe needs to put on their big boy pants and say, okay, let's figure this out. We can't depend on the States anymore. We either are able to defend ourselves or we're going to leave ourselves exposed. So that's one reality that they're starting to address as they're increasing the defense spending over there in Europe. That's one thing. And then the other thing is that China is taking advantage of this because China is like, look, like if I take Taiwan, America's not going to do anything. Or America's going to be like, oh, you have to say thank you to me so I can come defend yourselves? Really? China has been doing drills on Taiwan for so long. So this creates a lot of uncertainty as well, which is very scary. It's always been there, the possibility of China coming in and really taking over Taiwan. But this creates a gap in power, a power vacuum. And this is something that scares me. So I'm definitely paying attention to that. And I think those are new risks that are sort of like fresh within the Nvidia trade, because that could be a massive hit to their valuation. But again, there are amazing companies that are starting to become fairly valued, right? The market in the last 2 years has been priced for perfection. PEs are over 30. In companies like Walmart, companies like Costco, companies that are usually defensive and tend to have lower PEs, we are seeing those PE ratios extremely high. And if we look at the S&P, let me have a look at real quick, the S&P 500 PE ratio, right? We are sitting right now at 25.8. Right, on the average of all of the companies in the S&P 500, which is historically a little bit high, but just before the correction that we had, we were sitting at 30. Right? So we are coming back to those levels where sitting around 20 would be ideal. So we could potentially see some more weakness, but obviously that depends on the story that the States and Trump says, because Trump is center stage. So what are we looking for? What am I looking for in order for me to be comfortable in this market? A resolution to the Ukraine situation, whether it's a backing or a peace deal or a ceasefire. I'm hoping that Israel and Gaza can come to terms and the ceasefire does not stop. And hopefully China does not continue the geopolitics. And I'm hoping that also, we get a little bit more clarity. Okay, what are we going to do with these tariffs? Are we going to set them back and then work together towards a better a better outcome, which is what I think Trump wants, but he's going to create that pain at the beginning because he does one thing. You have to be stronger when you're going into the negotiating table. And it's either you are stronger because of the decisions that you've taken before, which he does not believe he is because of Biden, or the second one, which is kick somebody in the gut and make them fall down to the ground, and you're definitely stronger than them, which is what he did with Zelensky. It was a public shaming. In my opinion, public shaming. He was willing to come in and he was willing to talk about it, and at the end they got aggressive. Why did they get aggressive? Because he was expecting Zelensky to come in and kiss the ring. He did it. Zelensky didn't, but he couldn't. Zelensky couldn't. Zelensky has a ton of people dead in his country right now. He cannot just go and kiss the ring because he will disrespect every single person that has died in that war. So that's the big thing that I see there, right? So again, companies like you said, I definitely agree with 100%. It's like try to find those values and start setting up those buy orders for companies that you truly believe in. And if you see those dips, those story doesn't change. Microsoft going lower, bargain. Google, bargain. Nvidia, bargain at this level, right? If you manage to get Nvidia at 110, bargain. You know what I mean? You got around 6 months of growth, and you're paying less. So do I see that changing? No, I don't see that changing at all, right? I'm also paying attention to small little trades because, again, I do continue to think that Trump is a trading man. You gotta trade Trump. You gotta be nimble with a little bit of your portfolio to get in and get out. Those SMCI trades where all of a sudden the micro becomes more important than the macro for a couple of seconds, But
I had one question about your portfolio actually, because I saw your portfolio was only down like 6% this month, but you have like 20% in Nvidia that has been going down double digits. How did you manage to hold up so strong?
There's been a couple of things, right? So the SMCI trade, that was a trade that I actually saw a lot of value in. So the SMCI trade was something I saw the opportunity, and the market had and the thing is like this is happening in many different companies, right? I'm not always going to get them right, but in so many different companies, there are companies that have just been severely punished for no reason. Now, SMCI was severely punished for a reason. Don't get me wrong, but the market tends to overreact. Right? Because all of a sudden you get the rumor, and then you get the acting on the rumor, and then you get the massive people freaking out. Oh my God, I'm seeing my money drop 150%. Like, oh, what's happening? Oh my God, this is crazy. In the midst of war, everybody sells. Everybody runs for the hills. But I'm like, wait a second, they are leaving too. You know what I mean? Like the fears are sort of I sat in the earnings call. The CEO says, look, we are gonna file. And the fact that he's telling you this in a public matter means that he could go to jail for things like that, for misleading the investors. So he told us. And I was like, okay, cool. I'm willing to take this risk. So I bought SMCI little, and then the stock went back up. Obviously, like it's come back again, because it's definitely, but there's been small trades like that. And then obviously, like I am in safety. So if you look at my overall portfolio, there's always safety. So I have the Costco's, I have the Walmarts, right? Where it's like you're seeing, whenever you see a de-riskment from the high runners, like the Nvidias, the Amazons, you see, like you can see, like look at the what's it called? Give me a second.
It's going into defensive. Yeah.
Yeah. Right. Correct. So it's like, but if you look at what's this called? At the color map, man, here, I'm going to show you, right? So this is, I want to show you, let me share my screen, right? So if we go to, what's this called again? I can't remember the name.
No idea.
But yeah, when you look at this, for example, it's interesting to see, right? It's like, so what are we seeing, for example, in the last month of performance, right? So we've seen it like an escape from what was working during the COVID, during the last 2 years. Technology, advancements, euphoria, all of that is moving into, like you said, healthcare, into telecom services, utilities, right? So we're going back to safety. And even Walmart, funny enough, Walmart tends to be safety because right now it's being valued at AI prices, right? I think their PE is sitting somewhere in the 30 level, like 40, right? Like right now, Nvidia is cheaper than Walmart to buy, right? Which tells you is like, oh my goodness, you know what I mean? What is happening here, right? So all of a sudden is like, we are seeing that movement. We are seeing that sort of correction into other territories as well. So that's where potentially just, hey, I'm moving to safety. I'm making sure that my money is safe. And companies like Procter and Gamble are going to continue to sell whether we have a recession or not. You have to wash your hair. This happens, right? So yes, that's sort of where I'm sitting at right now. But yeah,
no, it's a bit what I'm thinking as well. So people should not be scared of this correction, even if it goes deeper. I mean, now is the time to prepare to buy, and you'll be happy in a couple of months,
Yeah.
years. It's long term, so you don't have to be like angry if it keeps dropping. But that's why I always buy in layers. Like I had one buy for Nvidia already. Now I'm looking for my second buy on Nvidia. And if it drops to the third and fourth buy level I have pre-planned, then for me it's perfect. I'm happy when the markets go up, but I'm also happy when the markets go down because you can buy companies at a discount. It's like going to the shop and then you see a cute t-shirt you want to buy, 50% off. Perfect. It's the same in the stock market, you know? When something is 30% off, it's a great deal.
For sure. And the thing is like right now we are in that sort of phase, right? Where it's like, okay, figure out exactly what companies are the ones that you think you have missed, you know? Companies like Nvidia in the past, companies like Nvidia, companies like Palantir, companies like
Palantir
that.
drops
Yeah.
more, it could be another buy.
Right? And then the thing is like you are getting buy points and it's like, yeah, sometimes you like the, you know, it's like, okay, like maybe you see a stock and you're like, oh, I wish I could have bought some. And then all of a sudden you potentially could have bought at the price that you were interested at. And then it's like, oh, wow, like set up a buy order, right? That doesn't hurt, right? Setting up a buy order and hoping that it hits at some point or another. You know, the market corrections, like the way that the market has corrected lately is definitely something that has shown to be, you know, snappy with Trump. You know, all of a sudden you can see.
I just wanted to share, like, also we're actually in a phase where the market corrects. If you look at the average of the stock market, we're right at this green arrow where the market usually corrects in February and is kind of sideways until end of April. But then once you're in May, you can see the market trend up again. And this is based on cyclicality. So it's not 100% perfect, but it's what we are expecting right now. So I'm not sure if you can see it.
Yeah, I can see it right now.
So it should be bullish, especially near the end of the year.
Yeah, no, I think that Trump has to figure out exactly, like, well, I think he knows what he wants, and he's probably gonna get it if he creates enough pain for everybody. The question is like, how much damage does he create to his, like, you know, like America's view of, like, the world view on America? And I think it's gonna create a little damage, but I don't think he cares. I don't think he cares. Like he's like, look, like I want this. I'm gonna have it. I'm gonna make you sign the dotted line. You don't have the card. He's making everybody play cards, and he knows that people don't have the cards in order to, you know, he's gonna be fine. He can last the 4 years in austerity measures. It's gonna be fine, right? It's America. America's still number one. You know, he's just making sure everybody knows that. You know, So it'll be interesting to see how it progresses, you know. Make sure you follow us, both Timothy and I, and Market Bus, and all of the guys from Market Bus. Hopefully we can get everybody on here, you know. But
we put our links in the description.
Make sure, you know, we post on eToro our thoughts and reviews. So make sure you read them because, you know, why not? Why not? But yeah, anything else you want to say?
No, I think we said everything.
Nice. All right.